Hello and welcome back to the lesson. I'm back to continue with the subject on taxation. We're still on the topic on value-added tax. Today we are going to discuss the offenses in relation to value-added tax. Offenses in relation to value-added tax. And in Kenya, candidates, offenses related to value-added tax are primarily governed by the Tax Procedures Act and the Value Added Tax, along with subsequent finance acts. So if you are to know the offenses under the VAT, under VAT in Kenya, you only need to read the Tax Procedures Act, then you read the Value Added Tax Act and the subsequent finance acts. These laws outline various acts of non-compliance that constitute offenses, and these violations or offenses carry administrative penalties, interest, and in more severe cases, criminal prosecution leading to fines and imprisonment. So in this lesson, we're going to highlight the offenses in relation to value-added tax in Kenya. And these offenses are contained or governed by the Tax Procedures Act, the Value-Added Tax, and Finance Acts. The first offense is failure to register or deregister for VAT. Failure to register and deregister for value-added tax. Failure to register and deregister for VAT. That's the first offense. That is to mean operating a business whose supplies are taxable, or operating a business whose taxable supplies exceeds the threshold of 5 million Kenya shillings in any 12-month period without registering for value-added tax, that is an offense. Similarly, failing to apply for deregistration when no longer required to be a VAT registered person constitutes an offense in VAT. Failure to register or failure to deregister for VAT. Number 2 is an offense related to records. Failure to keep, retain, and also to maintain proper records. Failure to keep, retain, because registered persons are required, first of all, to keep the records. Then you are also required to retain the records that you are keeping and maintain proper records for VAT purposes. Failure to keep, retain, or maintain proper records. Not maintaining accurate and complete records for VAT related transactions such as sales, purchases, invoices, credit notes, and even debit notes for the prescribed period. And the period is generally 5 years for VAT records. That includes deliberately preparing or maintaining false documents. That is the offense. And the penalty is 10% of the amount of tax payable, subject to a minimum of 100,000 shillings. And if there is no tax payable, the penalty is 100,000 shillings. 3. Late filing of VAT returns. Late filing of VAT returns. Late filing of VAT returns. The offense, candidates, is failing to submit the monthly VAT return by the due date. the due date is 20th of the month following. All right, 20th of the month following. So if you are to make a return for the month of January, then the deadline is 20th of February. If you are filing returns for February, then the deadline is 20th of March. If you are filing the VAT returns for March, the deadline is 20th of April. So late filing, if you are to file these returns after 20th of the following month, then that constitutes an offense, and there is a penalty for that. The penalty is whichever is higher, or 5% of the tax due, or 10,000 Kenya shillings. If 5% of the amount due is more than 10,000 shillings, then you pay that amount, which is in excess of 10,000 shillings. But if it is less than 10,000 shillings, then you pay the 10,000 shillings, whichever is higher. 4. Late payment of VAT. Late payment of VAT constitutes an offense, and the offense is failing to remit the VAT due to Kenya Revenue Authority by the 20th of the following month. What is the penalty? The penalty is 5% of the amount due plus interest of 1% per month on the unpaid tax until it's paid in full. Until it's paid in full. So late payment of VAT, and there is also that is the offense which comes with a penalty. Offense number 5. Offense number 5 is understating sales. Understating sales on one hand, or overstating input tax, or overstating tax. Understating sales or overstating input tax. When you do that, that gives rise to what we call a tax shortfall. It leads to a tax shortfall. It gives rise to a tax shortfall, and that is an offense. The offense is deliberately providing false or misleading statements or omitting information that results in a lower VAT liability. That leads to a lower VAT liability. That is an offense. That is to mean under declaring output tax or a higher VAT refund. You understand? This is a form of tax evasion, which is an offense. When you understate sales, then you are committing, deliberately understate sales, then you are committing an offense which constitutes tax evasion. That is an offense. The 6th offense in relation to VAT is fraudulent claim for a VAT refund. Fraudulent claim for VAT refund. Fraudulent claim for VAT refund. The offense is making a false or misleading claim for a VAT refund that one is not entitled to. If you are not entitled to a VAT refund and you make a claim for VAT refund, that constitutes an offense under VAT, and there is a penalty for that. All right? There is a penalty for such. The penalty is 200% of the amount of the fraudulent claim, and this penalty is generally not eligible for waiver. When you make a fraudulent claim, you will pay 200 more, 200% of the claim that you've made fraudulently. 7. The 7th offense in relation to VAT is tax evasion. Tax evasion is an offense, and the offense is broadly, the offense include any deliberate act or omission designed to illegally reduce or avoid a tax liability, including VAT. And while it is not explicitly defined, it's treated similar to fraud, which means willful neglect. Fraud here means willful neglect or gross neglect under the Tax Procedures Act. Tax evasion is an offense. Number 8, offense number 8 is tax avoidance. Avoiding tax is also an offense, and this could be due to aggressive tax planning. And while you know, candidates, tax avoidance is illegal. You can avoid tax through proper tax planning. Avoiding tax is legal when structured within the confines of the law. All right? Within the confines of the law. And KRA can invoke general anti-avoidance rules if a transaction is whose primary purpose is to avoid tax. And just like evasion, the penalty is 200% of the amount of tax that would have been avoided. So that would be the penalty. Tax avoidance. 9, failure to comply with e-teams. Failure to comply with e-teams. Failure to comply with electronic tax system. The offense is failure. So candidate, the penalty for failing to comply with e-teams is 100,000 shillings if satisfactory reasons for non-compliance are not provided within 14 days of KRA's request. So if one fails to comply with the e-teams and one does not provide satisfactory reasons why they are not complying with the e-teams, then that can attract a penalty of 100,000 shillings within 14 days. So failure to comply with e-teams is an offense. Number 10, offense number 10 is issuing invoices that are invalid. Issuing invalid or non-compliance tax invoices. Issuing invalid or non-compliant. Issuing invalid or issuing non-compliant tax invoices constitutes an offense. Issuing tax invoices that do not meet the prescribed requirements under the VAT Act, including those not generated from e-teams, that is an offense. And what is the consequence? That may lead to disallowance of input tax claims for the recipient and also penalties for the issuer. Offense number 11 is failure to deduct or remit withholding VAT. Failure to deduct or remit. Failure to deduct or failure to remit withholding tax. Withholding tax. This is for appointed agents. If a person is designated as a withholding VAT agent, failing to deduct and remit the specified VAT amounts to an offense. And the penalty is 10% of the amount of the tax involved, up to a maximum of 1 million Kenya shillings. And late payment may also attract interest. Number 12. The 12th offense is obstruction of authorized officers. Obstruction of authorized KRA officers. Obstruction. The offense is hindering, obstructing, or even refusing to cooperate with the Kenya Revenue Authority officers during audits, during inspections, or during investigations. And the penalty can attract fines and imprisonment. Offense number 13 is avoiding or abetting an offense. Avoiding or abetting an offense. Avoiding or abetting an offense. That means assisting or inciting or inducing another person to commit a VAT related offense, and the penalty is that the person who does so is liable for the same sanctions as the offense committed. So these are 13 offenses in relation to VAT. One is failure to register or deregister for VAT. That's offense number 1. We've said that these offenses are primarily governed by the Tax Procedures Act and the VAT Act of 2012. Number 2, failure to keep, retain, or maintain proper records. 3, late filing of VAT returns. 4, late payment of VAT. 5, understating sales or overstating input tax, which leads to a tax shortfall. Number 6, fraudulent claiming for VAT refunds. 7, tax evasion. 8, tax avoidance. 9, failure to comply with the ETIMS. 10, issuing invalid or non-compliant tax invoices. 11, failure to deduct or remit withholding tax. Number 12, obstruction of authorized officers. And lastly, avoiding or abetting an offense. So these are the offenses, candidates, and therefore it's very critical for VAT registered persons to be fully aware of these offenses and their associated penalties to ensure full compliance and avoid legal repercussions. Thank you for taking time to study with us. In our next session, we continue to share knowledge in taxation. Bye.